Felix here, and welcome to this pre-market live stream. I'm just checking the audio is working, and yes, it is. I want to walk you through five enormously important things here today. We're going to start with the 4 reasons why markets are tanking. I want to give you a bonus. I'll explain that in a second. The jobs recession seems real. We need to understand that. I'll give you Charlie Munger's advice if he was with us. And number 4, will the Fed save us this time? And if it doesn't, what's actually going to happen here? So let me share my screen with you here. There we go. The 4 secret reasons why the markets are tanking. And this bonus, insanely important. I read something today from somebody who was like, oh, I'm fine, I'm leveraged, I'll hold these forever. And I was like, you're going to hold leveraged ETFs forever? Really? Okay, let me explain that to you, why that's an incredibly dangerous thing to do. Jobs recession, Charlie Munger's advice. And is the Fed going to save the stock market this time around? If you think this is going to be useful to understand properly, deeply, then write wealth in the chat and in the comments down below. And I see that you're awake and real and listening. So write wealth in the chat, and I know that we'll keep going, and it's trying to provide you some value here. So let me kick off with what's going on here. So the S&P is down 5%. It's the largest pullback in, 6 months. It's the 30th time we've pulled back by more than 5% since just 2009. Thanks for everybody writing wealth here. 30th time. It's not exactly a rare event, is it? 30 times in whatever that is, 15, 16 years. So thanks for all the wealth there, guys. Appreciate you being awake and paying attention. Okay, so let me walk you through the actual reasons then here. So, and we can see this, and I'll show it to you. The first reason is CTA volumes. What the heck are CTA volumes? These are algo volumes, algo funds, computers, and they sell very, very heavily at the beginning of the day and at the end of the day, which is when they trade. Can you look this up? Yep, you certainly can. Here is the S&P from yesterday in Trade Vision, and what do you see? Well, you see that there is a spike in volume at the beginning of the day here, right? And what does the market do? It tanks as those buggers sell. And then at the end of the day, just before 4 p.m., you see the sell-off. Again, your algo funds selling. So beginning of the day here and the end of the day, those bastards are selling, and that's definitely not helpful. So that's the first reason we're actually going down. The second reason is that the buyback desks, which is the biggest single buyer of stocks ever. Literally, the biggest single buyer of stocks are companies themselves. They buy their own shares back. Those guys go home at 350. I don't know what they're going to do at 350, but they go home at 350. So what do you see? Well, just before they go home, the market tanks because those guys stop buying, right? So they help us a little bit during the day, and then they go home, close the order books, and the market starts tanking again. So again, that's really, really important to understand that in terms of timing, right? And then also last night, we saw a lot of hedging going on. People were protecting their portfolios because they were worried what the Donald was going to say. And Cersei was going to say something really, really crazy. I listened to the whole thing. He actually didn't say anything particularly surprising, I don't think. So I don't think that's going to have that much of an impact. But what happens is when people hedge, what happens? Hedging drives the stock market down, drives the stock price down. When you then close your hedge, it does the opposite. And you'll see this before major events like Fed speeches, inflation data, and so on. You see the day before the market goes down, the day after the market tends to go up. That's just the way hedging flows work, if you understand that a little bit. And then we've got leveraged ETF strategies. And I want to spend a few minutes on that because it's so important to understand that. Honestly, if you don't understand this, you really put your money and your wealth and your safety at massive risk. So the amount of leveraged ETFs has grown tremendously, right? There's 140 billion in that now. In 2020, it was like 30 billion. So it's gone up like 5 times. And of course, it is the promise of quicker riches, right? If the stock market or your stock goes up and that ETF is leveraged, it's going to go up 2 times or 3 times. Now, what's the problem with it? What happens when it drops? This is going to get a little bit technical, and I posted this on my Twitter if you want to read this in peace and quiet, or you can just take a screenshot. But I wrote, holding leveraged ETFs for the long run is a special kind of painful. They're designed to multiply daily returns, not long-term returns. There's a fundamental problem with this, and you might seriously want to take screenshots of this or take notes, because this is really gonna be important. They don't track the underlying stock perfectly. So for example, say, here's a nice example. Say you were in a 3 times leveraged ETF, right? And it's trading at 100, the index. It falls 10%, so the index falls to 90, your ETF falls to 70, right? It's 3 times the $10 drop. To maintain the 3 times leverage on the now 90 index, it rebalances to hold exposure worth 3 times the 90. If the index drops another 10% to 81, the ETF falls another 30%, now down to 49%. So the losses accelerate, and the fund's value shrinks way, way, way faster than the index, right? It's just the leverage thing. But the problem is that not only are there transaction costs for all this daily deleveraging and rebalancing, but there is something we call decay in it. So essentially, the problem is that the losses compound faster on a larger base in the leveraged ETF. So the leveraged ETF will lose more money than it should in proportion to the underlying. And it just means that in the long run, in a falling market, these ETFs will lose an astounding amount of money, and way, way, way more than you think. So that's the problem with this. They're really not built to be owned for the long run. They're built to be used for the very short term to hedge a position or run something up for a couple of days. But people are now owning these in the long run, and it's a really, 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 really dangerous thing to do. So I would not recommend this in any way, shape, or form. If you want to leverage, options, I believe, are a much, much safer play if you understand them. A little bit more complex, but much safer. Does that make some sense to you? If that makes some sense to you, right, put a 1 in the chat, just the number 1, and I understand. Doesn't have to make 100% sense, just some sense. And obviously, feel free to take screenshots there as well. So what would be the one thing that would be tremendously helpful for you? It would be, well, what do we buy next, right? Well, let me walk you through some jobs data here, because the jobs data is pretty astounding. And you're then going to ask yourself, okay, some ones there, okay, appreciate that. Are we supposed to get a confirmation we sign up to your webinar? Says Don. Yeah, it should be in your inbox. Maybe have a look in your spam folder, my friend. Otherwise, drop me an email. Alpha Charlie, what's with all the 3s there? So, yeah, I want to do one thing this week, given like in homage to last week and this week as this madness continues. A lot of you have been messaging me, literally like hundreds or thousands of you probably with all the social media about like, what do we do? And I'm worried about this. Should I buy this? Should I sell that? And I want to give you the rules to when do you buy, when do you sell, how do you manage it? And then I also want to teach you, because it's important in a moment like this, how do we hedge our portfolio? How do we protect our portfolio from the big drawdowns? Not the 5%, because 5% is fine, but what if it was 30%, right? That would be a real problem for a lot of people, 30% down. And we can make money on that in a pretty much free way if we understand how to do that. So I want to teach you guys that. If you come and join me on Thursday at 8:30 p.m. New York time, it's completely free, felixprehn.com/webinar, links down below. It's also pinned into the chat. And I will teach you literally what I've learned over the last 13, 14 years of doing this, what I learned as a former banker and now trading for myself. And it's cost me hundreds of thousands of dollars in mentors. Like I literally have a chat group with about 8 of my mentors, and we were literally just discussing some hedging trades. And you just get this like couple of 100 years of wisdom in there. And I love having access to that. And I want to share that wisdom with you guys, because I know it's going to help you get from the concerns and the worries and the struggles to what do I do, what do I buy, to clarity, having a clear plan, and actually driving yourself towards your financial freedom goals, which is really what the mission is here. So come and join me there on Thursday. Do you do options learning in the academy too, or mostly stocks? we do both, my friend. So we do both. I think if you're a complete beginner, then I would start with stocks. It's much simpler, and you need to understand those basics and charts and risk management and all those kind of core concepts. And if you really enjoy that and you want to take it further, then come and learn options with us. And obviously you could start wherever you like. There's no real hard rule on that, but that's what I would generally recommend. So I think both have a hugely important part to play in a wealth growing strategy, which is I think what everybody should have, and everybody does have. It just might be that yours isn't all that well formed, all right, if you're really honest with yourself. So come and join me on Thursday there. So okay, we just got out jobs data, and this is private data from ADP, which is a private company. I actually own some of those shares, and we were expecting them to generate 140,000 jobs. They reported 77,000. Right, so that's a pretty significant drop. So 100% or something like 50% less than expected. And what does that mean? Does that mean we're heading for a recession? But here's the actual ADP data, and it's that little blue and red bar there. That's the jobs created. So it's the worst jobs creation since mid 2024. We had one that was a little bit worse. So what are we seeing? Well, we're seeing the jobs market finally slowing down. Is that a good thing or a bad thing? Well, it might impact what the Fed's going to do next, right? And we'll have a look at that in a second. Are options more of a gamble than investing in regular stocks, says Monica? If you don't know what you're doing, yes. But you can also gamble with stocks. So it depends on how you use it. If you use it right, you can get an advantage over stocks with less risk and potentially higher outcomes. But you do need to understand it. So there's a little bit more to it, a little bit more layers to that cake of knowledge than just plain good old vanilla stocks. So this is something we need to watch out for. And I thought this was a nice bit of wisdom. I saw this quote this morning. This is from one of the greatest investors who's ever lived, one of the kindest people out there who's ever been in the financial markets, Charlie Munger, God rest his soul. And he said, if all you ever did was buy high quality stocks on the 200-week moving average, you'd beat most investors by a large margin over time. Now, we're not quite at the 200-week moving average yet. We're at about the 200-day moving average, so we need to go quite a bit longer. But what he's essentially saying is buy the dip on quality, right? And that's a pretty decent approach if you want to make some money. I thought I'd throw that in there because it can sometimes we just need the inspiration. That feels kind of bad. The markets are falling. It's a bit depressing. But actually, this is like everything is on sale. And everything being on sale is usually a good thing, right? Job data is a lagging indicator. It's true, although the private sector data, the ADP data, is a little bit more up to date than what the government puts out, which is just complete gobbledygook, really. So, yeah, come and join me tomorrow at felixprehn.com/webinar at 8:30 p.m. And it's a live, completely free stock investing masterclass. I'm going to teach you when to buy, what to buy, when to sell, and I will give you a bonus hedging lesson to prepare you for the next dip, which will inevitably come. This is the 30th 5% dip we've had in the last 15 years. So we get at least 2 of these a year. So you want to be prepared for them, and you want to be able to make money out of them. Now, I'd mentioned the Fed. Everything is transitory. And the Fed, we're hoping, will cut interest rates. And what are you seeing on this chart here? You're seeing that at the end, the expectation for the end of year 2025 rates just went from 4% down to 3.5. So that's 2 rate cuts, right? That's 2 rate cuts. That's pretty good. Why is that pretty good? Because a 0.5% interest rate cut, what does it do to your favorite growth stock? A 0.5% interest rate cut, 0.5% cut should drive your stocks up by about 5%. And you're like, I need more than 5%. Well, but it's a good start, right? And momentum might just drive it up a little bit more. You didn't know that Charlie's passed away. I'm very sorry to break that news to you. Yeah, he was a lovely man. He was a lovely man, obviously. A very, very smart guy too. But one of the few people on Wall Street who actually had their heart in the right place. So yeah, definitely a big loss there. So shall we have a look then at what's actually going on out there? Well, this is the pre-market. It's not terrible. It's not amazing either, but it's just sort of greenish, right? Clinging on for dear life. Now, there is some rumor, some alleged hope that the snow Mexicans and the sombrero wearing Canadians might come to the table and will give Trump something, and therefore tariffs will be less. Trump to decide on Canada-Mexico relief today, Lutnick says, who's the new Commerce Secretary. And we've got these 25% tariffs on both of them since yesterday. What he's thinking about is which section of the market that can maybe he'll consider giving them relief. Or some categories will be left at 25%, some will be left out. It could be autos, it could be others as well that get some relief. But there are going to be some tariffs, but he's thinking about sections. So it could be that might be some exemptions or some exemptions for a while to give certain industries a little bit more time to like cooperate. And yeah, so that's kind of interesting one there. The other thing, I think the big takeaway from his speech yesterday was what? What did you guys think was the biggest takeaway? And don't give me the politics, let's focus on money. What was your biggest takeaway from the Trump speech yesterday? Put it in the chat down below and I'll tell you what I thought was the biggest takeaway. So for me, it was autos, because he said, the president, said that he wants to make car loans tax deductible if and only if the car is American made. Right? And that's a snow Mexican. I joke. Honestly, the Canadians, you guys are so polite. I keep saying that stupid joke, which actually a Canadian friend of mine taught me. And you guys are not offended because you're just too nice. So we love the Canadians, really. Now, what he said is tax deductible car loans or car financing, auto financing for American-made cars. Now, the most American-made car out there is Tesla, by far, right? By far the most American components. So that could be a big boon for Tesla. So maybe payback for Elon, I don't know, but you know, it would be a very good thing certainly for us Tesla holders. Retroactive tax cuts for small caps. Well, tax cuts overall, yeah. We love to laugh and make fun of ourselves, Nelson. Yeah, you're a good lot. Really, they are the Canadians. They don't get all angry on you. Now, this will require congressional approval, so it isn't going to happen like tomorrow. I don't know what speed Congress moves at, but I think it takes them at least till the summer to pass anything, because I don't know why. So that won't happen immediately, but that's something I think to potentially look forward to, would be that tax cut for American-made cars, essentially, right? Which could be a nice one there. Aruna, I know you're one of us, one of the Canadians out there. Appreciate you. We still have a Buy American Act. Yes, was that actually genuinely loud, or was that a little bit like the Inflation Reduction Act, which actually caused inflation? Tesla Germany sales down 86% this month. Yeah, I saw that. Is that actually true, or is that a headline? Let's ask the source of all truth, Grok. Are Tesla Germany sales really down 86% this month? Let's see. You think that they would know? There's no different. Claim seems to stem from misunderstanding or exaggeration of available data, possibly influenced by posts on X. However, recent data does indicate significant declines in Tesla sales in Germany for earlier months. According to posts on X, Tesla sales dropped substantial percentages. February, 76% down, while the overall market rose. Okay, 1,400 cars. The idea of an 86% drop does not align with the current date, March 5th, since the full monthly data for March would not yet be available so early in the month. So basically, we don't know. Right? But yeah, we're talking about 1,400 cars here, by the way. Like it's really, really, really relevant, right, in terms of size. So, but I appreciate you bringing that up. Simplifying complexities, asking about buybacks. Well, PayPal has about 20 billion in buybacks authorized, actually. Now, are they going to do that many? No, they use 90% of their free cash flow to do it. Free cash flow is about 6 billion. So they're going to do about 5 and a bit billion per year. They're not going to do it any quicker. And by the way, that's still about 10% a year of market cap. So it's a pretty extraordinary buyback program there. They're going to buy back 30% of their own company at the present stock price, which seems like an extraordinary value. But there we are. Canadian here, we're aware of our leadership. Oh, you are? Okay, Laura, I'm glad there's some of you who are not in love with your leadership. We're not in love with your leadership, but of course it is up to you to elect whoever you want. Do you like Grok the best out of all the AIs, says Logan? All the AIs have a different feature. I'm finding for news right now, Grok is the best. And it's because it goes through X, social media. So it has access to quite a lot of stuff. But they're all a little bit different. Claude is very good for writing. I think ChatGPT is pretty good sort of all around. They all have their kind of uses, but they're all a little bit different. Depends a little bit on what you're trying to do. This is all about finance, not leadership. Yeah, I know. Well, look, everybody has an opinion. I mean, I think that guy you have there in Canada, he reminds me of Tony Blair. He's sort of a very good politician, if that was a compliment. My heat map's all red, says David. Ours is not that bad. Who's we? Me and Winston. Winston's my dog, if you didn't realize. Do you know where the European stock markets are sliding down? Greece? Well, actually, the Europeans have done something pretty interesting, which is they're going to spend lots of money that they don't have. So the Europeans, the Germans, which I'm one of, they're going to spend allegedly $400 billion on defense, which is not something they've done since 1939. But yes, it's of course going to be great for defense contractors all around. And they're going to pay for it with debt. Yes, responsible, I know. Germany actually has relatively moderate debt compared to most countries, about 60% of GDP, because they've been relatively frugal. But it's an odd one to me, because I think the big problem facing Germany isn't really the lack of guns. I think it's something a little bit different. But yeah, that's what they're going to do, and it's wars are always a nice way to distract from the domestic problems, which is what they look at. The heat market. This is pre-market, my friends. This is pre-market. Yeah, it's pre-market. It's not looking too bad. He's lending them the money. Well, they're going to sell bonds, aren't they? And people believe the German government will pay them back, so they can borrow pretty cheaply. What are the best EU defense companies to invest in? Probably is the German ones, and probably American ones, quite frankly. I think Trump is going to make them buy quite a lot of American guns, I would imagine, because that's the whole point of NATO, isn't it? To have more people to sell arms to. I thought that was the point of NATO. Maybe I'm a cynic. The German central bank, that would always be an option. Actually, I don't think the German central bank can do that anymore, because they neutered it and they moved it to Luxembourg. But they have something called the German Bank for Reconstruction or something like that. So they have state-owned banks who could always buy the debt. But no, there'll be appetite for it. The market will buy it. I think Europe is trying to show us some muscles. Yes, it should be interesting. Axon. Yeah, so should we look at a couple of stocks, guys? We can certainly do that. Before we do, I want to give you guys the offer of sharing with you everything I've learned the last 13 years or so as an investor and trader, and give you guys rules so that you don't have to wake up every day and go, what do I do today? Oh my God, the market's doing this, what? And instead, you can be calm and collected and have an actual plan. And so I'll be teaching you that on Thursday at 8:30 p.m. New York time. So for people with jobs and so on, they can join. So feel free to share the link, obviously, felixprehn.org/webinar. And it's completely free. I'll teach you guys for about probably 2 hours, given a nice long Q&A session in there as well. So you can ask me lots of more technical questions on investing and trading, not just sort of the day's news, what we usually cover here. And I'll also teach you as a bonus how to hedge. What does hedging mean? How to insure your portfolio, how to protect it. right? So that when bad things happen, good things happen to you. It's a bit like car insurance. Like you hit a tree and a nice insurance company comes around and pays for it. That's kind of what hedging is all about. And Fox there, thanks for posting the link down below, felixprehn.org/webinar. Rolls-Royce stocks, BAE, yeah, there's a lot of stuff. Obviously, that's going to get money from that. Nelson just bought TradeVision yesterday. Loads of a little complicated. Nelson, I'd love it if you had some ideas of how we make it more simple. That's always my goal, to make it more simple. You see, for all the stocks, we show you pre-market data. So anything, say SPY here, you can see where it's trading right now at 577. That's pre-market. But let's go back to a day chart and have a look at some of our favorites. And what shall we start with? Anything? SoFi, maybe? Which is up about 0.5 percentage point there, if I'm not mistaken. Yeah, just a little bit above yesterday's high. It's the blue dotted line where we are. We basically safely bounced off that support line at 13 there. And that support line is one of our cleverest indicators because it's actually based on market positioning. We don't make that line up. It's based on real hard data of everybody's trades. Let's have a look at, say, Palantir, and feel free to shout out some of them as well. Max, you're very kind. CrowdStrike, yeah, they just reported earnings, right? Have a look at that in a second too. Palantir here bouncing up 1.59%. There was a deal here. I tweeted that. If you follow me on X, my account there is Finance Felix. Don't fall for all the scammers who misspell my name slightly. And yeah, I just shared that out there. TWG is a new partnership there, which is a $40 billion company, investments, sports, all sorts of stuff. Sort of a bit of a random ass holding company, but a big deal nevertheless. So that's a nice deal there for Palantir. What else we got? PayPal. I should obviously pronounce it correctly. It's up 1.1%. Yeah, wow, brilliant. $68. Well, not that exciting, but still better than, you know, really hard kick in the nut, which is what we've been getting the last few days. I'm liking TV so far. The options data is a bit complex, but you can turn that off, my friend. So you can turn options on here on the right. You could also just show news instead, or alternatively, you could show your watch lists. It really is up to you, or you could just turn the whole thing off. You know, we have probably the best options tool, not just probably, actually, we do have the best options tool out there, literally in the market, that anybody's ever built. But if you're not an options trader, you can just turn it off. Like, it's just, you know, we don't charge extra for it or anything. We just have a very, very low $19 charge a month for it. Here's the link to it, guys, because I believe that everybody should have access to insanely good data. And that's what makes it easier and faster to find good trades. And that's really our goal here. Now, ACHR, I just saw that. Somebody was shouting that out. Archer is slightly in the green, 0.6% up. Not a huge move exactly. CrowdStrike just reported earnings. You figure out how to use your options data. Give it time. Like, just don't you know, give it a little bit of time. Yeah, CrowdStrike dumping below the support level here. That's a gap down. Oh, I thought, didn't they have earnings? I thought they had earnings. Clearly. Am I wrong on that? Did CrowdStrike have earnings? Let me have a look. Don't think so. No. No. I was completely wrong. Just a downgrade. That's really all that is to it. So it's basically going back into what? It's going back into this zone here, right? So the breakout kind of failed, and we're back to where we started. Crowd earnings was last night. Okay, interesting. Not sure why we haven't got that data there. I will take a screenshot and wag a finger at our development team, because we should always have that data. Obviously, data provider, they're not giving us that. Poor guidance. Okay, down as much as 20 points. Thanks very much for that. Didn't meet the expectations. Yeah, I thought I'd read that. It's okay. I haven't lost my marbles there completely then. Tesla, have we looked at Tesla yet? It's just not doing anything, is it? Market's actually open now, so it's just, yeah, it's just basically flat, like flat as a pancake. NVDA, even Trump's promise of tax write-offs for car loans has not moved the auto market there. Nvidia is up a percentage point, which is pretty decent. Should be interested to see what are GM and Ford doing. GM is up 4%. Well, okay, doesn't look like much, does it? But yeah, GM's up quite a bit. What about Ford? Also up a little bit here, 1.5%. This is probably a little bit of a hope. Actually, no, it's coming back down here to 920. A bit of a hope of maybe some, tariffs not coming in as quite as harshly. VIX, yeah, keeps going up, and this is the number one risk you got to manage with VIX, that it can spike significantly higher than you'd like it to. So you have to make sure your position sizing and you got to be hedged. Basically, that's what I would always recommend, or maybe use VXX. That might be slightly safer. But yeah, definitely, you got to set up a trade. If you set up a trade like this that could survive it going to, the last high was at 65. Well, what if we went to 100? Would you still be okay at 100? That's what you got to ask yourself. Otherwise, you can get yourself some pretty strong burns there. Nobody wants to talk about AMD. Nope, because it keeps falling, right? Every day AMD falls a little bit more. And it's just, yeah, it's a falling knife. It's a classic falling knife. I've been saying this for 5 months now. Everyone gives me stick about it because everyone's like, this is the one thing, Felix, that'll make us all rich. You don't want to be late to the party. Actually, I do want to be late to the party. You actually want to be late to every stock party ever. That's the only way that you'll be safe. And if you want to really understand what I mean by that, come and join me tomorrow at felixprehn.org/webinar, and I'll teach you. We'll run a 2-hour educational thing, strategy, mindset, the whole lot boxed together. I'll also teach you how to insure your portfolio for absolutely nothing at all. Scott, ever 70 to VIX at 23. Are you hedged, my friend, or do you just short a call? Because shorting a call can be a dangerous thing to do. And paper trading VIX, that's a great thing to do, my friend. You learn a lot that way. How would you short VIX? I wouldn't short it directly. I'd use options, but you need to understand how that really works. It's a little bit on the complex side. Hedged, Scott, good man. Does Intel still have potential? Well, did you notice that Trump said he wants to get rid of the American Chip Act or whatever it's called? Well, Intel is one of the major recipients of all that money, which they're doing absolutely nothing at all. So I think there is some political downside here to Intel, I think. You have to choose between NVIDIA and AMD right now. Which one would you hold to the end of the year? Well, thankfully, Theo, that's not a decision I have to make because I wouldn't buy either right now. But I would say NVIDIA is certainly the more promising candidate there right now. AMD is just fallen, right? From a chart point of view, NVIDIA isn't quite as bad. But yeah. How to short Trump? Paul, with that German flag there, it seems like you're German, so what does it matter to you? You don't get to elect them. Leave it to the American people to elect their own people. And we put up with the people that the Germans elect, and that's just how democracy works, right? And every 4 or 5 years, you get a chance to do it again. Baldo, I didn't even know I could buy stocks through my 401k until last year. Yeah, 401ks are brilliant up to the limit that your employer matches it. Otherwise, they're horrible instruments. So use it up till the limit your employer matches it, then put the rest into an IRA, a Roth IRA or something like that. Be way, way, way better than that. The rumor of the Intel buyout has also faded. Yeah, absolutely. Tariffs against EU in April. Yeah, couldn't happen to a bunch of apparatchiks, right? All right, we're getting a little political now. Some people are going to get upset. Palantir looks pretty good this morning. A nice new deal that they're announced with TWG. Well, I said nice play. It's actually down a little bit already. So yeah, stocks are waiting and waiting and waiting. They shall. Tesla is flat. Nvidia is, let's have a look, down a little bit, 0.3%. So moderate moves here, which is definitely a lot better than big moves down. But PayPal is up a percentage point, which is rather nice. Is it safe to buy a break up all the macro uncertainty, says Christian? Look at the sector. That's what I would look at. And then, yeah, you have to also factor in a little bit the broader market right now. So that's definitely something to consider. Hard not to get political when politicians destroy the stock market. Well, I would actually argue that they're the ones that make it, because pretty much all the money that we've made in the stock market is because of money printing, right? So they cause massive asset inflation, politicians, and like what the German government is doing now, right? Spending lots of money they don't have, that causes massive asset inflation, which makes the wealthier wealthy. So if you are reasonably asset wealthy already, it's going to be very good for you. And if it isn't, it'll hopefully encourage you to get asset wealthy, because that's the only real wealthy there'll ever be down the road. Kevin, with direction, well, you can make money on the way down just as you can on the way up. It really makes very little difference. Up or down is sort of pretty much the same thing, really. When is the app coming out? That's a good question, my friend. What does it say in here? We have a roadmap here. First version of the mobile app, March 7th. There we go. It implies that there is a second version coming. But yeah, that news, stock imports, bunch of other stuff. What's next up? Watch lists, new option strategy, covered calls. That'll, I think, be quite useful for a lot of you guys. VRVP indicator in the stock chart. We're working at that, you know, like a VWAP kind of indicator, which I think is going to be pretty useful. Yeah, a lot of stuff. And then you guys have a lot of requests. Certainly alerts and news is one thing that we're going to focus on a lot over the next coming weeks and months. You have to see the left side column with your favorite stocks in order to go between them. Have you seen this, the watch list? Yeah, your recent ones and your, you know, whatever you want. You can pop them in here. You can edit it from here too. So you can delete them or you can add to it. So you can basically have as many watch lists as you want here on the right, and add to that. So I think that's an improvement. I think so we can still do that better. I completely agree, but it's a pretty good start. And this is Trade Vision, by the way, guys. If you haven't got yourself a trial to that at the very least yet, it's a tool that we could probably charge a couple of $100 for a month, definitely very easily. If we did it for institutions, we could charge them $500, maybe $1,000 a month, but we don't. We charge you $19 because we just want to be able to pay for the developers, and we want to be able to give you guys the same quality data you'd have access to if you were working inside an investment bank, because we got to fill that knowledge gap, that data gap, and this is really what the intention here is with Trade Vision. So go and check it out. There's a link down below, felixfriends.org/Trade Vision. And I didn't know that roadmap was there. I know we put out a lot of stuff that is sometimes at the beginning a little bit hidden. I believe in releasing things fast and then figuring out where we should put it. That's sort of, and sometimes we figure stuff out. Thought you hated covered calls and real strategy. Hate is a strong word, my friend. I think it's a suboptimal strategy, but I also appreciate that for many people that's an entry into growing as an investor and as a trader in terms of knowledge. So, you know, we got to encourage people to grow and build and learn, and there are uses for it. I mean, it's an exit strategy. It's a very good one. Say you're a bag holder and you want to get out of something. Covered call is actually the perfect strategy in that moment. So it really just depends on the situation. Nicholas, appreciate you. Thank you very much. Are you going to produce less videos once you hit 1 million subs? Why? Okay. I'll make videos as long as I enjoy this. I really enjoy this, especially these lives. I really enjoy doing these every day, and I just basically share like what I would normally look at and how I would normally prepare for the morning and for the market. And I get to do it now with, you know, what about 6,000-7,000 people have joined us here in the last 40 minutes, which is kind of a lot more fun than doing it on my own. And I see the impact we're having, right? I see all the nice, kind comments you guys are writing, whether that's here on YouTube or by email or inside of a community. And that's really my goal, is to actually make an impact and empower and help people to get to a place where money can be your potentially primary financial income or financial asset. And it works for you, and it looks after you, and it provides for you and your family, and it allows you to do fun stuff safely. That's really the entire goal here. So come and join me on tomorrow. Is it tomorrow? No, it's the day after. I think it's the day after, isn't it? Thursday evening. That's tomorrow. FelixPrehn.com/webinar, and I'll be running a educational webinar where I will teach you what to buy, when to buy it, and when to sell it, because that's really important. But I'll also teach you how to insure your portfolio for free against these massive drops, because that's also a really, really cool skill. And I can teach you that in probably 15 minutes. And you will walk away with that knowledge, as well as the when to buy and when to sell knowledge. And you'll have that for the rest of your life. So come and join me there tomorrow. It's completely free of charge. FelixPrehn.org/webinar. And I wish you all a fantastic day. All the best. Take care, guys.